studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB this Wednesday afternoon. I'm Juliette Sarli. Great to have your company on a day where we are seeing absolute rockets under this market. Let's have a look at where the CBO 200 is closing out the day's trade, up 1.4%. The ASX 200 rallying about 1.5% and getting back above that 9,000 point level. Of course, we've just gone into match off, so we'll see if we stay above that in the next 10 minutes or so. But at the moment, up 140 points, 1.6%, a new 50-day high. Now, of course, it's all about reporting season and these roaring results that we have had coming through, I should say, lifting the market over 9,000 on this reporting roar, if you will. Now, CBA, of course, the developed world's most expensive banking stock, the biggest stock on our market, the biggest bank in our country. There was so much trepidation about this, but they've absolutely smashed it out of the park once again, beating with this lift in first half cash profit, lifting its interim dividend as well, a big bet as well on tech here as well. I spoke to Matt Common, the CEO. You can find that full interview on our website and we'll bring you a snippet shortly. But then, of course, the other news that we were following, and it was about this time yesterday that we saw that news that CSL was saying goodbye to its CEO ahead of its results, which very much disappointed the market, and CSL has weighed heavily today on the market. But then we also had later in the evening yesterday news that ASX CEO Helen Lofthouse will leave in May. So this CEO exodus weighing somewhat on the market, particularly when you look at the healthcare sector. Healthcare down by 3.3%, but otherwise incredible day on the market. 8 of the 11 sectors moving higher, really led by these financials with this near 4% gain. So let's get into where the banks are finishing. And CommBank there up 6.5%. I mean, at one point shares were up by something like 8%. It is the biggest one-day gain that CBA shares have witnessed since March 2020, so 6 years. Westpac up by about 3%, NAB, ANZ and Macquarie all lifting. I spoke to Matt Common as well, the CEO of CBA, asking how they're viewing that disruption by Macquarie Group, particularly amidst this move into lifting a lot of the lending aspects. But he said, look, you know, they're always looking at disruptors in the space and didn't necessarily pinpoint Macquarie. Having a look at healthcare though on the CSL news and the disappointment to its earnings, down by some 12%, dragging the other healthcare companies along with it, specifically ResMed, which was down 4.5%. And utilities in focus as well. Look at AGL. We spoke to CFO Gary Brown. You can also find that online. Shares up by 11.3%, $9.86. But Aussie Broadband also in there with a very punchy near 14% gain, and it's going to acquire AGL's telco business. So that has been seen as very positive by the market. All right, so getting into some of what we saw with the nitty-gritty, the CBA reporting record first half cash earnings, thanks to that robust growth in lending and deposit volumes. And I asked Matt Common about the current rate environment on the back of the RBA interest rate hike last week. And he said, so far, the CBA is not seeing signs of mortgage stress.
We're forecasting one more rate increase in May. So we're not talking about going back to the peak of the rate hiking cycle. I do think there is quite an evident disconnect. Obviously, rates going up is weighing on many customers' minds, and certainly customers with a home loan or with a debt facility. But I do think it's going to be fairly constrained in terms of the number of rate hikes that will be necessary.
Our editor has been very busy. That interview in full now on our website, ausbiz.com.au. To CSL though, of course, we saw that share price plunge after reporting a dive in half-year profit. That was reported just hours after we announced that the CEO was leaving. Now, Henry Jennings from Marcus Today spoke to us earlier. He had some, shall we say, strong words to describe the situation at CSL.
Shambolic is the view, I have to say. Shambolic. I mean, poor old Paul McKenzie has been there for an awful long time. He's only the third CEO that CSL has had, and he's been escorted out the door. They call it retired, but he has been escorted out the door with a cardboard box and security following him. it's crackers. We've seen this company in a shambolic stage. 1 minute they're demerging Seqirus, the next minute they're going to not demerge it because the market conditions aren't right. And then at 5 past, they're just starting to get some shareholder, approval and win back some trust. Then at 5 past 4, 5 minutes before the chocolate wheel, the match out starts, they drop this bombshell, and the stock goes from up 2% to down 5%. And to be honest, that was just a kind of a portent for what was to come, which we've seen the results this morning, and to say the least, they're not very impressive.
It's really interesting because I thought it was a timely announcement too at 4:05 rather than 4:10 when the market had closed. And I spoke to Jason Todd from 10Cap about that. He indicated that potentially what we had seen there was a bit of an anomaly with someone at CSL pulling the trigger, perhaps too early. Anyway, you're looking at SGH's share price now. It posted a 2% rise in first half net profit to $518 million. I spoke to CEO Ryan Stokes to see if the conglomerate is still on the lookout for further M&A after, of course, that BlueScope no deal from BlueScope.
Yes, but we lay out the criteria we look to as far as what would fit within SGH. The 7 criteria we have around, we still think industrial businesses are a good fit. Those that are in Australia with scale, privileged assets, they're the elements that we like. And then, is there a value opportunity for us? That's part of the criteria. So, always looking at and exploring opportunities.
Always looking. All right, AGL Energy there, narrowing its annual profit guidance. It cited higher consumer margins, lower costs. Nadine spoke to the CFO, Gary Brown, about the demand for data centres and the related infrastructure needs they're seeing.
So what we're doing is we are working with industry participants, particularly within the data centre area, to look at attracting those types of players to our sites, because we have advantage sites which already have access to infrastructure and critical elements with things like connection and water. So we've got prime locations, and we're in discussions with a lot of those providers at the moment. But at the end of the day, we also want to make sure that we can contract up with these different people that we hope to attract to our sites, so we can contract up and provide them with energy going forward.
And you remember that ad, that's not all. There was still a lot of reporting season companies out there. James Hardie raising its full year earnings forecast after reporting a better than expected third quarter profit, shares up 12%. We spoke to Dexus Industrial REIT's Jason Wheat as well. It did see a fall in net profit, but it's seeing some upside in terms of its margins, and shares up by 1.2%. Computershare though fell. Revenue did rise, but net profit was down amid higher expenses. The ASX, of course, we touched on news that CEO Helen Lofthouse will retire or step down in May. And Domino's Pizza appointing Andrew Gregory as its incoming CEO. He's got a lot of experience in the quick service restaurant field. He used to work at McDonald's. All right, let's get now to our guest, Kai Chen from MPC Markets joining us. Kai, I think this is one of the busiest days on the reporting calendar. How have you seen it? I mean, CBA just blowing it out of the water.
Yeah, no, absolutely. We've got many companies reporting, and it's definitely the busy time of the reporting season. But I think the leader and laggards, obviously CBA reporting and a fantastic result. Just improving year on year. Their operating income's up about 5%. Impairments down about 20% from the previous half. And obviously increasing the dividends as well. So, like CBA, it is the most expensive bank in the world, but it continues to deliver. They are very strong operators, and, we had a correction for the last 6 months, and it's been an excellent opportunity to get back in. So, it's definitely been on our watch list to look at CBA. And they delivered to the market today. But I think obviously the laggard today was CSL, and what a reaction this morning to what was announced. And of course, with the Paul McKenzie, the last CEO leaving, and Gordon Naylor taking over. But I do think the price action is a little bit overblown, where they have had some issues in terms of their business segment. So Bearings, their iron, plasma division has underperformed due to US Medicare reforms. But it's nothing crazy, it's down about 6% in terms of rev, and there's been some impairments that's come through. So, definitely a bit of restructure, but they are on target in their restructuring phase. So they're about 60% complete for the FY26. However, I do think it's a good opportunity. The price, it went down to about 150 on the open today. It's bounced back to about 161. But I do think it is fairly undervalued at the moment. They are increasing share buybacks as well from 500 million to 750 million. I really do think it's a very good opportunity to buy CSL at the moment if you don't have that on.
When you look at those big reactions though, Kai, and we saw this last reporting season as well, I had a guest on earlier, Jason Ton from 10Cap, saying it's basically deliver or die in this earnings season, right? Like, you deliver well, you get rewarded like CBA, you deliver badly, you basically drown like CSL. I mean, it's quite extraordinary. How does it sort of make a job like yours more difficult? I know you've got to have cash on the sidelines, but what are you watching for?
Yeah, no, absolutely. I think you're exactly right. There was a lot of growth expectations priced into a lot of the stocks that were performing well over the last year. And if they deliver poorly, they get punished. But like you said, have a bit of cash on the sidelines. And for us, we average into some of these positions, so we're not going all in one go and trying to pick the lows. I think it's incredibly difficult to do that. But when it comes into the value zone, it really does present an opportunity, because in 2-3 years' time, you'll be looking back and going, wow, what an opportunity it was, right? So we're preparing all our clients to get in a little bit more on CSL, where they haven't been able to get on in the last the previous 2-3 years, where it's been at fairly high valuations. So we're seeing it as a bit more of an opportunity. And they in the announcement, they are still targeting guidance for FY26, so they're expecting the second half of the year to be a fairly good one.
Yeah, such an interesting point. This is where you make money, right? When you see these big drops in a stock like CSL. More broadly, though, the market rallying back about 9,000 points.
Yes.
Is this momentum going to last, do you reckon?
Yeah, no, it's interesting. I think we had a little bit of a scare over the last couple of weeks, and it's really, it's consolidated this week. It'll be interesting to see, of course, with the rate hike, it has some effect on the market, but the market seems to have brushed that off. Again, geopolitically, there's things still in the background that may pop up, but I think for the moment, the market's happy to consolidate and go a bit higher, I think.
All right, Kai, I'll let you go. I know it's a busy day and you guys have got to get to the desk, but thank you so much for joining us, Kai Chen from MPC Markets, and of course, sticking with the thematic of stocks today. The stock of the day was Aussie Broadband, which will buy AGL Energy's telecommunications business and customer assets for $125 million. We heard from our experts, Jonathan Takadina, also from MPC Markets, Michael Gable from Fairmont Equities.
Before today, Aussie Broadband shares had been trending lower since October, so there have been concerns that concerns over slowing growth in broadband sales, basically. So the company reports their results on the 23rd of February. So we've seen, share price coming back, sort of weak consumer confidence. Just wasn't sort of heading in the right direction. And then we got this news out today, which at first glance looked like it was a nice sort of, bolt-on for the business. But I think as you start to read into it, and I have to admit, it's not a company that I cover, so I'm not overly familiar with, but look, it does look like they need to issue some shares to help fund it. Questions around the price.
Anytime where you can sort of get a bolt-on at a reasonable price. I mean, like, they're paying a script for this to become the third largest provider, and that's why the market's rewarded that. Funny enough, usually when the market rewards someone making the acquisition, usually the shares get punished on the other end. But in this case, AGL with their results has actually jumped as well. So you can just see that the market actually likes this deal for both sides of the party. And I do think that this space will continue to perform. I mean, look, it's not going to shoot the lights out, but it's definitely a place where you can park some funds that may not be in the commodity space and you're looking for some safety. So while I do like this deal and I do like that 10% jump, it's still a hold for me at this stage, mainly because I'm looking for sort of more explosive growth in other areas.
You've worked hard for your money all your life. Now your money needs to work hard for you. Whether you're building, transferring or drawing down, the right information makes all the difference. At Ausbiz Retire, you'll find the latest news and insights from trusted experts all in one place. Ausbiz Retire is powered by RAN, retirement income done differently.
What an extraordinary day on the market. Thanks to CBA. Let's have a look at the market leaders today. And Aussie Broadband, of course, we touched on there as the stock of the day after agreeing to buy AGL's telco assets. AGL lifted by that too. James Hardie doing well on its third quarter result and outlook. Evolution Mining, it really came through with a big lift in its dividend, sending its shares up by more than 8%. And some love in tech as well, with Zip up 5%. To the downside though, CSL, of course, we've touched on that ad nauseum, dragging down ResMed as well. Computer share on its disappointing result. Drone Shield giving back, and Telix Pharmaceuticals down by some 3%. In the small end of town, Star Pharma had a great day, up by some 18%. BetMakers Tech there too. While these stocks on your screen did not perform as well today when we look at the laggards in the small end of town, including Brockman Mining, Pacific Edge and Waratah Minerals. All right, well, you know that non-farm payrolls were delayed, but they are expected to be released tonight in the US, a little bit different for a Wednesday. Also got earnings continuing with the likes of Cisco, McDonald's and Kraft Heinz. Tomorrow we have more earnings coming through, including the likes of IAG. We'll be speaking to CFO William McDonnell. Also the ASX Pro Medicus will be speaking to Dr. Sam Hupert as well. Treasury Wine Estate, South 32 and Paladin. And you also have the Melbourne Institute inflation expectations coming through. Let's recap where the market is, up 1.4% there on the CBO 200. The ASX 200 has finished higher by 147 points, 1.7%, 9,014, so back above 9,000, a new 50-day high. And I know it didn't come up as one of the leaders there, but really in terms of market breadth and value, that gain coming through from CBA, extraordinary. Its biggest lift in 6 years, lifting the financial sector and the overall market, but the financial sector in particular up 3.5%. Wow, what a day. All right, we'll do it all again from 9:45 a.m. Eastern. We'll see you tomorrow.